wondered how price closes bullish or bearish, or why we have bullish or bearish candles, or even how to read the Japanese candlesticks, then this video is going to be for you. Hi you guys, my name is Shaquan. I'm the trading educator at SLFX Trading, and in today's video I am going to be teaching you how to read Japanese price action candlesticks, how to observe them on different time frames, and what they mean for you when you are buying or selling in the market. Now we're going to be here on our price chart, so I need you guys to take some really good thorough notes. You can always go back and watch this video again if you have to, and if you find value in this video, be sure to click the thumbs up to like the video, and also subscribe to the channel as well, so when I come out with my weekly videos you can be notified. Now, also too, if you find value in this video and you say, Shaquan, I'd like more help for you, I'd like to work with you, be sure to click the links in my bio to book a free 15-minute discovery call with me. Yes, you will be actually speaking to me. So make sure you book that discovery call. So let's go ahead and get on the price charts. So now we're here on a price chart, you guys, and we're just going to be working with the Australian dollar, United States dollar, for this example. Now we're going to be dealing with two time frames, because once you get a feel for the information, you can go and apply it to any other time frame. It's just you have to make sure that you hear me well as I speak, and then listen to what I'm saying, and then go back and observe it for yourself. Implement the information. So when it comes to price action candlesticks, these red and green candles are price action candlesticks. These are a form of price action. Price action is just a visible movement that you see on your price chart. And as you guys can see, there's nothing on the price chart, which means we are dealing with a naked chart. The price action movement is already there for you. You just have to be able to analyze and observe it. So as you're analyzing and observing the green and red candles, green and red candles, green and red candles, they have names and they mean something. They mean that they represent price, the way price moves. So think about the words price action. What action is price taking? Remember that, okay? So let's go over an example. Here you see a red candle. Red candles are called bearish candles because that means that for the day price went down. If you think about a bear crossed low to the ground, right? So it's a bearish candle or red candle. Typically on red candles, we know that we want to sell the information, because in trading psychology or let's talk about human psychology, for example, or for right now, when we see red, we know that's bad. Like something goes down, right? So that's why we call it bearish, red, or sell candles. Okay, it doesn't mean you're going to sell on every single candle, but that's just the human psychology behind the red candle. So here's how this candle forms. A bearish or a red candle opens at the top, and as we start to get more into it, you'll see what I mean. So basically it starts to form at the top. There's a candle body here. Okay, so I'm going to draw a barrier here so you guys can see, and these are also called borders. So you see how I have the black border around the candle. This is called a candle body, and then you guys are going to be seeing some thin lines. These are called wicks. I'll get into it in just a moment. So the candle body begins to form at the top, and as you can see here, if it forms at the top, it's going to go down. It has to close downward. So the candle body that stops here, or the border, this is where price closes. But this represents something, you guys. What this is representing is an exchange rate. So wherever price closed, this movement here that I'm moving my crosshair, this is called a crosshair. If I move my crosshair to position on the bottom or the border of the candle, you can see that price closes at 0.65168. So look on my price scale that's located to the right where you see all those numbers. Do you see the grade number is 0.65168, and that's why I have it right here. That means this is where price closed at. Okay, so when people talk about the open and the closure of the candle, the open is not as important as the closure. It's all about where price closed. That's how we know that it's a red candle, because it closed low at a particular number, and that is where price closed here at 0.65168. Dealing with the next candle, wherever price closed is where the next candle begins to form, and that's why I have the exact same number here. So the next candle, as you guys can see, is an example of a green candle or a bullish candle. Bulls mean that price goes high. If you think about Michael Jordan, he could jump high. So think about the team Bulls, the Bulls basketball team that he was on, Bulls. He jumped high, Michael Jordan, right? So bullish candle, right? Bullish candles close at the top. It has to close high. It's a higher candle. It represents a higher exchange rate. So for example, if price closed low at 0.65168 and price began forming at 0.65168, and because it's a green candle, that means that it closed higher than the previous exchange rate, or it closed higher that day, then this means that when price closed, if I just draw the border once again on this candle body, let's draw a border, then when price closed, and if I move my crosshair on top of that candle, if you look on the price scale once again to the right hand side, you'll see the grayed out box. It says 0.66762, and that's why I have this exchange rate here. That means that price closed at a higher exchange rate than the previous day. You guys, it's just that simple. This is how candles form. So basically, when it closes, it opens at the same rate and it'll close higher or lower for the day. It just depends. Okay, we're going to use another example where first the bullish candle is first. So with this candle, and let's draw the border on, let's focus on the candle body here. So with this candle body here, remember, if price closes high on a bullish candle, as you guys can see, this is where price closed. So for example, if price closed here, that means it started forming at the bottom. And it closed here at 0.64564. But as you guys can see, the next candle will begin to form at the same exchange rate or price. Okay? But remember, it's a bearish candle, and bearish candles close low. So if it closed lower, as you guys can see, if I move my crosshair, and once again we pay attention to the price scale, price closed at 0.63794 on these examples. So bullish candle closes higher, bearish candle closes lower. Wherever either candle closes is where the next candle is going to begin to form. You guys, this is how price moves with these candles. But let's actually apply it to the price charts. Now, as we're applying it to the price charts, we need to go over something very important, which are your time frames. So time frames are very important because it represents a candle per a given time period. If you're analyzing multiple of time frames, and we're just going to use the daily and the 4 hour as our example. If I look at the daily time frame, my daily time frame candles are bigger than my 4 hour candles. That's because the daily time frame represents more exchange rates or pips than the 4 hour time frame. So basically the 4 hour time frame is what makes the daily candle, and let's get into it here. But let's look at the bigger picture first and then break it down into a smaller picture. So let's just deal with a few candles and then once again apply it to your price charts. Okay, so in this example here, when price moved bullish, as you guys can see, remember the bullish candle forms at the bottom. It begins to open at the bottom and then it closes at the top. As you guys can see, when that happened with this bullish candle here, it began to form at the same price that it closed. Once again, it's just continuing the movement from the previous day. Now, keep in mind that with a daily time frame candle, it takes 24 hours for one candle to form. So on Sunday at 5 p.m. Eastern Standard Time, that's when the daily candle begins to open. As a matter of fact, all time frames begin to form their candles, right? But for the daily time frame, that candle will not close, which means if this candle closed high, because it's a bullish candle, it's a green candle as we can see, this candle did not close until Monday at 5 p.m. Eastern Standard Time, which represents 24 hours of price action movement. Now, you're not going to sit here and look at that candle go all throughout the day, right? You're not going to sit there and do it. But if you are a lower time frame trader, what this means is that for this particular candle right here, and I am going to put a rectangle over it, and we're just going to make this lighter. What this means is that it took 6 4-hour candles for price to create this one candle. This is called fractions, you guys, and this is why time periods are very important, because the lower in time frames you go, the more candles you're going to see. So if it took 24 hours for this candle to go or to move or to close, then guess what? When we drop down to the 4-hour time frame, we should see 6 4-hour candles that represents this movement. Now let's talk about the 4-hour candle for right now, okay? If it takes 6 4-hour candles to form this one candle or to form this daily time frame candle, then you have to know when these candles form. So for example, on a 4-hour time frame, and let's talk about the Sunday once again, every candle opens at the same time on Sunday at 5 o'clock p.m. Eastern Standard Time, but they each close differently. If we're on the 4-hour time frame, that means it takes 4 hours for every candle to form. And this is how it looks. At 5 o'clock p.m. Eastern Standard Time on a Sunday, that's when the 4-hour candle begins to form. Then it closes at 9 o'clock p.m. Eastern Standard Time. A new candle begins to form. Then it closes at 1 o'clock a.m. A new candle begins to form. Then it closes at 5 o'clock a.m. A new candle begins to form. Then 9 o'clock a.m. A new candle begins to form. 1 o'clock p.m. A new candle begins to form. And then 5 o'clock p.m., which represents 24 hours in that day, the candle closes and another one begins to form for the next trading day, which is why we have daily time frame candles, because those 6 periods on the 4-hour time frame, or those 6 candle closures, represents one 24-hour candle on the daily time frame. So for example, this is the candle that began to form and it closed here on April 24th. This one closed at 5 o'clock p.m. Eastern Standard Time. Now make sure that as I'm speaking, because I'm speaking in Eastern Standard Time because that's my time zone, apply this information to your time zone so that you'll know when these candles open and form for you. So this is at 5 o'clock. This candle closed at 9 o'clock. This candle closed at 1 a.m. This candle closed at 5 a.m. This candle closed at 9 o'clock a.m. This candle closed at 1 o'clock p.m. and this candle closed at 5 o'clock p.m. This is all the candles that made up that one bullish candle, which is why it closed higher for the day. And remember the black wick, those thin lines that I was telling you about? Those thin lines represents the 4-hour time frame candle. So those thin lines represents candles on a lower time frame. So instead of seeing wicks, we're going to see candles. But imagine dropping down to the 1 hour. Now watch this. It took 4 1-hour candles to form this one candle. So if it closed here bullish and began to open here, it took 4 1-hour candles to form this one candle to close higher. So do you guys see how that cycle repeats itself? So anytime a trader says that price is doing something different on each time frame, that's actually opposite. It's not doing anything different. You're seeing fractions of time frames. What's going on is you grouped all the time frames into a consolidated price chart and you're seeing so much movement, but you need to understand what one candle represents and how they are grouped together. It's all about price movement, and every time frame displays the same information. It just depends on the time frames that you're looking at. So let's go back up to time frames. And let's look at the bearish information. So as you guys can see, as price closed bullish here, it opened here, closed bullish here. Well, guess what happened the next trading day? Price opened, as you can tell, it closed bullish, it opened here, and it closed bearish for the next day. So it closed at a lower exchange rate. Price closed and opened here at 0.65569. You're going to notice these numbers by your price scales. Now, I'm saying the word exchange rate. Exchange rates means price, okay? So it's the same numbers on your price scale, basically. And so basically, if price opened here and it closed here at 0.65125, that means for the day price was bearish. But how does that look on a lower time frame? So we can see that we have a wick here. Let's talk about what the wicks represents. Wicks represents where price was, how it traded for the day. We can see it got up as high as 0.65703. It even got as low as 0.64883. So it showed you where price was for the day, but it showed you where price closed for the day. Once again, the candle closure is more important than the wicks. So here, when price closed here, let's see what this movement is. Let's see what happened for this day. Remember, as we drop down, we see more candles. So when I drop down to my 4-hour time frame, let's look at it. So once again, the wicks that you saw is a candle body. Okay, so every time you drop down, when you see wicks, know that their candle body is on a lower time frame. And so let's look at where this candle began to form. Now, if you look at my price scale and if you see where my crosshair is, and let's just go down to the bottom, you guys are going to see a date. Okay, so basically the date shows you the date that the candle formed, and it shows you when it opened. So if this candle opened, and let's go to where it opened here at 1 o'clock, there we go. It's telling me when it opened, but the candle closure is going to tell me, hey, 4 hours later, I closed here. So don't be put off by the open and close dates and times, okay? But anyway, and so this is how we got that bearish candle, okay? So it started on the 29th. Once again, it takes 24 hours for the candle to close, and it ended on the 30th here, and the new candle began to form at 5 o'clock p.m. Eastern Standard Time the same day, so it can close for the next day. And so once again, you guys, even if you broke this information down, even to lower time frames, you guys, this one candle here, let's look at it. If it closed bullish for this 4-hour time period, remember it took 4 1-hour candles to make this bullish candle, right? And then the next trading day, we can see that price went up even a little bit higher. But we know that this is where price was because of the wick. This is where price was on a lower at a lower exchange rate, but this is where price closed. So it took 4 1-hour candles to even form that bearish candle, and you can keep breaking this information down. So you guys, I hope you all enjoyed this video, and I really pray that it helped you read your price action candlesticks a lot better, as well as your time frames and exchange rates. So make sure you guys put this information into practice, and just remember, you guys, that time frames represents time periods, or how long it takes for a candle to open and close. And make sure to always remember that the higher in time frames you go, the bigger the candles you're going to see. The lower in time frames you go, the more candles you're going to see. But they do represent either more pips or a range of exchange rates, or basically prices from your price scale. So in the next video, I will be breaking that information down a lot more when it comes to your pips, your price scales, and exchange rates. And that video will be released next week. So once again, if you found value in this video, be sure to like the video, subscribe, and share the video. So I look forward to seeing you guys in the next video. You guys have a continued safe trading week. Y'all be blessed.